6 trades, I lose 4, all I need to do is win 2. So I'm not so bothered about my losses as much as my win is evening out my losses. If I take 9 trades, if I lose 6, that means all I need to do is just win 3. All right, so you can see this is 9 trades I've taken. For me to blow my account means I am not winning at all. If I win 2 or 3, I have not blown my account. I have broken even. Hello family, welcome back to my Trader's Journey channel. My name is Jideneye. Okay, so if you're new here, this is a channel where I share my journey, starting Forex again after about 13 years. And let's see how it goes, moving from $0 in Forex returns to $10,000. Let's see how it goes. Okay, so if you've not watched any of my previous videos, so you can just check them in the in my channel page. Okay, so some new updates has happened so far. All right, so first and foremost, we have some new gears that we've added to the family. You can see that I have a better lighting right now. Okay, so I have a better lighting because I have another new light gear, and also we have awesome good sound now. Hello family. Yeah, so I have a new gear for my audio right now so that I can have better production. So hit the subscribe button and join us in this channel and encourage your boy. Alright, in my last video where I spoke about choosing a Forex mentor, if you recall, I told you that I'm also in search for a new apartment for my family. It's just funny that in the UK area, with even £1,450 per month, I'm still looking for a house. So it's just funny how that is. If I have that amount back in my home country, Nigeria, I'm a big boy when it comes to accommodation, and this is just for a month. So that's really dragged me back in doing videos for this channel. We are still in the search. Trust God, we'll get one very soon. All right, but today I want to give you some little updates about what has been happening and development as touching the Forex journey. Okay, so today I want to talk about what I've learned so far. I've been able to pay attention more to understanding candle patterns, and I'm in the face of chart pattern right now, understanding chart pattern better. I know I'll still have time to put all these things together, but today I want to talk about how to manage your account. How do I manage my account? This is what I want to talk about today. All right, so I'm sure you people would have heard, if you are not new to trading or you are new to trading, you've heard about people saying they blew their account. How did you come about blowing your account? Something that is very important is to understand that if you have a poor management system, when I talk management, I mean risk management system, blowing your account becomes inevitable. So today I want to show you how can you position your account with proper risk management system so that your account can last long. All right, I know most of you, if you want to start trading, you will most likely be starting with £50, $50, that kind of $100. For me, that's child's play. Number one, the first thing I like to say is see that money as money you can lose, you can part way with. So that's not the kind of money you should be thinking of trying to convert to 100k in returns. You are deceiving yourself. If anybody ever told you that, it's just a clickbait to attract you to themselves. But in real time, that's not how they make their money. Any guru telling you that, just watch out for them. One thing I want to pay attention to is understanding that the lot size you use based on your account will tell you how far your account will go when it comes to trading. Okay, so very important. If your lot size is big, the tendency of blowing the account is quite huge. If your lot size is big in respect to the amount you have in your account, the tendency of blowing your account is very huge. All right, so I'll be going over to my screen now and showing you the impact of lot size and what are the things you have to put in place if you want to manage your account. For instance, if I have a $250 account, all right, I want to trade $250, and my goal is to ensure that I can still trade the account with taking a minimum of 10 different trade. It simply means that for me to take 10 different trades on the account of $250 means that at any point in time, I am willing to lose $25. So 25 times 10 means 250. That means I must have lost that account back to back 10 times for me to blow that account. Can you see now that I can know, I have a preformed knowledge that the account must have gone down, dropped back by 10 different trades of the same lot size for me to blow that account. So with that, I am more rest assured as compared to just trading without understanding what is happening. So I'm telling myself that I'm not willing to risk more than $25 per trade, which is 10% of the account. All right, so let me go to my lot size and see how will I use that to determine the lot size to work with. So I'm heading over to my system right now. Okay, so we're here on babypips.com website, and we are using the position size calculator to determine our lot size. So once you scroll down, remember I said my account size is $250. I'm willing to risk $25 per trade, which is 10%. So I'm working with 10%. All right, this is where you would appreciate the fact that imagine if you are working with a $50 account and you are risking 5%. It will take a long time. All right, so for me, if I'm working with a $50 account, I'm willing to risk as high as 20%. Why? Because for me, that $50 at the onset is as good as gone. So it's not something I want to use to make $100,000 or $1,000. All right, so $250, I'm risking 10%, which is $25. All right, my stop loss, like I said, I'm working with a stop loss of between 20 and 25. So imagine my stop loss is 20. All right, that's 20 pips. Okay, so I'm trading on GU, that's GBP USD. Once I hit calculate, so you can see that it's giving me the standard lot size. So this is the lot size I am working with. Do you understand? So there's no guess game. I'm not just saying, okay, I'm putting 0.3, 0.4. No. Why am I putting 0.4? I must be able to understand it from a calculation point of view. And you can see that all I need to trade with, if I'm willing to lose $25 for that trade on a 20 pips stop loss, is 0.12 or 0.13, but I'll call it 0.12 lot size. Very important. So you can see with this, I'm just risking $25. All right, so if my stop loss is just 10 pips, look at what will happen to my standard lot size. That means I can increase my lot size from 0.12 to 0.25. Why? Because my stop loss is now smaller. So I am meant to be looking for trades which stop loss are tighter. In terms of if I can get 20-25, that's a good trade for me. Why? Because I know I can maximize what I am doing. All right, so let's go back to our original stop loss of 20 pips. So that's 0.125. Okay, so what would I do? Look at it. If my risk to reward ratio is 1:2, it simply means I'm willing to lose $25 to make $50. Do you understand now? All right, so with this, I know that this one, as far as I'm concerned, whenever I place a trade, I see it as good as gone. Okay, so with this, let's do a little calculation to see what would have happened before I can blow my account. For me to blow a $250 account, risking $25 per trade means I have to have 10 consecutive loss. So you can see that I have 10 rounds of trade that I can possibly take on the $250 account if I'm losing 10 times. All right, so that's where money management comes into place in trading. Okay, so at what point will I break even and what point will I be profitable? So remember that the minimum risk to reward ratio I'm using is 1:2. If I take 3 trades, for instance, if I lose 2 and I win 1, I'm still broken even. Why? Because to lose 2 means I am losing just $50. Do you get it? And to win 1 means I am winning $50. So can you see that the calculation puts my mind at rest? So all those psychological trauma that usually happens with traders, I have reduced it. So if I take 6 trades, I lose 4, all I need to do is win 2. So I'm not so bothered about my losses as much as my win is evening out my losses. If I take 9 trades, if I lose 6, that means all I need to do is just win 3. All right, so you can see this is 9 trades I've taken. For me to blow my account means I am not winning at all. If I win 2 or 3, I have not blown my account. I have broken even. So if I take trades that I have taken 9 trades and I am losing 6 of it, it simply means I should check my strategy and my trade, the trade I'm taking. It means there's something wrong with it. So with $250, I can pull as much as 10 trades before that account can be blown. So you can see that with this proper risk management system, I put myself at a better leverage. This is if I am using a risk to reward ratio of 1:2. And if I get a risk to reward ratio of 1:3 at any point in time, it simply means that I am becoming more profitable, even if I have this kind of formula I'm working with. So with this, number one, the tendency of blowing my account is close to 0. Very important for us to do that. All right, so that's another thing I would like to say. Let me open a new chart. Remember, the lot size is 0.12. So what I usually do is, if this is where I took my first trade, this is my trade 1, and this is the stop loss. All right, this is my 20 pip stop loss level. All right, so what I do is, instead of putting the 0.12 together at once, I divide it by 2. 0.12 divided by 2. All right, so the first trade I would take would be that would be 0.06. Why am I doing this? Why? Because I know that in trade, if I put a trade, it doesn't just go like this at once. All right, I'm expecting it to sell. But what if I have drawback? I wait until I have a drawback that is sizable enough before I put in the next trade, which is the next 0.06. What have I done here? Note that my stop loss from here to this point is 20 pips. All right, so the second trade, indirectly, the stop loss is what? Will become 10 pips. If I want to increase the lot size at this point, I can, to maximize my trade for it to go in my direction. But because I like proper management and I like following my principle, I'll just keep it at 0.06 and 0.06. So you see, if you add both 0.06 and the two 0.06, we would arrive at 0.12. So you can see that this is the proper way. If I want to place 2 trades with still a risk of 10% of the account, which is $25, this is the proper way to do it. With this, I have removed all the guess game from it, and I can see that I can manage my account and my risk properly. If I can have smaller stop loss, I can maximize my returns, risking the same amount with a larger lot size. So with this, you see that it has removed all the guess game, all the agitation has been handled. Why? Because I have a better understanding of how much I am risking. And as far as I'm concerned, that $25 is as good as gone. But remember that my risk to reward ratio is a minimum of 1:2, which simply means that I am willing to risk $25 to make $50 if the trade goes in my direction. What if the trade does not go in my direction, like you saw in my explanation? It means that if I take 3 trades, I lose 2, I win 1. I'm still broke. I will still break even. Can you see what it means? It simply means that if I take 4 trades, I lose 2, I win 2. I'm not bothered. Why? Because I'm already in the profit zone. Why? Because I have lost $50 and I have gained $100. You see why it's very good for you to understand lot size calculation based on your account size. That's number one. And also, taking trades which stop loss is more than 25 for me is risky. It simply means that that trade is not good enough. All right, so with this, For me to blow the account simply means I would have taken 10 trades at loss consecutively for me to blow the account. You can see that it's difficult for me to blow the account. Why? Because I have a lot size calculation that is equivalent to the accounts that I operate. So it's very important for you to know that people that blow their account, two things. When they say people are over leveraging, over trading, it simply means that they are using lot size that is not equivalent to the accounts they have. Number one. Number two, it's their stop loss. Their lot size is also not equivalent to the stop loss. That means the number of pips that they are risking, all right, for the account also. So you can see that you can actually create a science out of managing your account, which for me, I feel this is the first thing I should even learn, and I'm paying attention to it before even taking trades. Why? Because I understand the money management of it. Remember that it's always said that trading is 80% psychological and 20% technical. Before I take any trade, I look at what is the number of pips I am willing to risk. If I'm discovering that the pips is more than 20 pips as my stop loss, I will most likely not take that trade and wait and see if there is a drawback to that 20 pips margin. If you have any other idea on how people can manage their accounts better, or why people blow their accounts, simply drop it in this comment box below so that more of us can learn from this. Thank you for watching our channel. So watch out for my next video, as I share how much progress I am making. Remember to subscribe and hit the notification bell, and why not share it with your friends so that they can also join me on this journey of mine. Thank you for watching. Cheers, man.